Welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because this Bitcoin consolidation and chop after a breakout is completely normal, and I still believe we have higher to go over the next few weeks. And usually these type of consolidations after a breakout lead to continuation to the upside, but so many people get chopped up in the short-term noise that they lose their position or panic sell before the move even happens. Now, I still believe Bitcoin is a bit expensive here compared to its 200-week moving average that it likes to revert to during its bear markets, but I do still believe we could see a push into the very expensive region before major concerns that price may be too overheated. It's nice to see that the short-term holder cost basis model still agrees with this. We have the short-term holder cost basis in blue, and as you can see, the further price gets extended from that short-term holder cost basis, you have the yellow as being heated and red as being overheated. The further we get away from the blue, the more likely it is for us to mean revert back to that short-term holder cost basis as investors take profit. And right now we're still comfortably between the blue and yellow lines, which tells us we still have room to rally higher before being overdue for a correction. So for me, my base case is that Bitcoin still has higher to go and that August is going to be a very solid month before we run into some trouble in September. Could we rally all the way into Q4? It's always a possibility, but as of right now, my base case is that September ends up being very rough, and depending how August ends up going, we can try and use that to forecast if we're going to see a rally into Q4 or if we're going to see the cycle top out a little bit earlier than usual in Q3 instead. Now, the good news is that seasonality also still agrees with price action. This is the last day of July, and July ended up being right in line with expectations with a 10% return based on what it usually does seasonality wise. A lot of people were expecting a painful, choppy summer, but we knew there was a high likelihood of July being solid, and I expect that momentum to carry into August. August is usually a bit of a coin flip. It doesn't tend to be that great in non-post halving years like anything outside of 2021, 2017, and 2013. But with 2025 being a post halving year and us having this momentum coming out of July with the consolidation, I do believe August will be a very solid month, but then September tends to almost always be pretty terrible for Bitcoin. So it would make sense for us to see a bigger correction in September, especially because of what we're now finally seeing from the global liquidity index. For the first time in almost 9 months, we're seeing a confirmed downtrend. We have lower highs and lower lows. And because Bitcoin has followed it with a lag this entire cycle by about 75 days, that means that Bitcoin and risk assets as a whole might be running into some trouble around that early to mid-September timeframe. So the fact that lines up almost perfectly with seasonality and lines up almost perfectly with this consolidation before continuation, it does seem like we're going to have a very solid August, but then we have to be cautious going into September. And now I know there's so many people out there saying the 4-year cycle is dead and we're actually going to have an up year in 2026 and this time is going to be different. And of course, there's always a possibility of this occurring, and we'll see if the data ends up pointing to that. But as of right now, this is not my base case, and I do expect 2026 to be rough, especially if global liquidity keeps going in the direction it's going in as of right now. If it ends up reversing sometime soon and putting in some massive rally higher, we can talk about a bullish 2026. But as of right now, we have to take the data as we see it. And all we can see as of right now is a downtrend in global liquidity that should impact Bitcoin from about mid-September to about late October based on the current data. And now, of course, no indicator is perfect and we can't rely on just one data point to make all of our decisions. I do expect this correlation to break eventually, but I'm happy to keep using it as long as it keeps working. But we'll, of course, keep monitoring things like sentiment to see when the top might be. Right now, sentiment is still cooling off in the greed region. If we end up seeing extreme greed going into September and everything lines up perfectly, that would increase the likelihood of us being correct in our base case of September being a major local top. But we see a lot of narratives lining up for a big move for Bitcoin in the very near future. We have very famous investors like Ray Dalio suggesting putting 15% in Bitcoin and gold amid US debt doom loop. And we see people talking about this all over the place now. We also have many crypto firms like Kraken or Circle that we just saw recently launching these IPOs, bringing even more excitement and attention to this asset class. And when you have very strong narratives combined with bullish price action, usually that's a very solid combination for price. And that's why I called Monday's free weekly report time to pay attention. Many investors get bored during the consolidation and chop and end up losing a lot of money trying to leverage trade the lower time frames, whereas it's a lot better to remain engaged and focused but not make any rash decisions while price is going sideways. This is why I didn't make any changes to my portfolio this week. Price has just been chopping sideways, so there was no reason to make any major changes, and I feel very well positioned for all possible outcomes. The majority of my portfolio is still exposed to the market because I'm still expecting higher prices, but I've been locking in profits along the way, so I don't have to panic that I'm going to miss the top or that every pullback we see could end up being the cycle top and have to ride that emotional roller coaster. And as always, if you'd like to learn about my portfolio automation system or mental models I use to navigate this market, you can check out the Crypto Enjoyers program. The price will be going up once again once I complete the common mistakes modules, but as of right now, that is still under development. And speaking of under development, this breakout we experienced in July is still underway and we have not broken structure quite yet. And just like every breakout we talked about before it, once Bitcoin has had these major breakouts that catch many sidelined investors off guard, it doesn't look back and it ends up just consolidating and continuing higher, as everybody has to chase the move. ETF inflows have slowed down quite a bit, but at least we're not seeing any major outflows, and it seems like the biggest inflow days tend to come when price is rallying as investors chase the move. But as of right now, as long as we don't see major outflows, it's good to see these ETFs are taking supply off the market and not selling it as soon as price goes higher. Strategy is still buying more and more Bitcoin. Just this week, they announced they bought another 21,000 Bitcoin for $2.5 billion. So that trend is still fully intact. And a lot of investors aren't selling here because they're patiently waiting for an announcement on the US Bitcoin reserve that keeps getting promised. And I don't have high hopes for what this announcement ends up being, but the fact that it's giving investors something to look forward to is bullish for price in the short term. So it looks like everything is lining up nicely for a bullish August and then a correction in September. And now this downside we're seeing in the global liquidity index is driven by the big bounce we have finally seen on the dollar index. We've been talking about this bounce and waiting for it for a few weeks now. The DXY is strengthening here because the market was initially expecting the Fed to cut rates in September, but now based on yesterday's FOMC, rate cuts have been pushed back to October. This of course can change as we receive more data, but as the market pushed back those rate cuts and priced that in, that strengthened the dollar. And this isn't surprising whatsoever. It's also not surprising that the Fed is still continuing quantitative tightening and reducing their balance sheet because inflation is still stubborn. Just this morning, we got a core PCE reading of 2.8%. The unemployment rate is still historically low at 4.1%, and we will be receiving an update to this tomorrow, and I'm sure markets will be watching that quite closely. We're still not seeing a big jump in layoffs, with initial jobless claims still quite low based on historical norms. GDP is still quite positive based on what the Atlanta Fed is forecasting at 2.9% for Q2. The S&P 500 is still in price discovery and putting in new highs almost every day, and Bitcoin is doing the same. So it's no surprise that rate cuts are getting pushed back. It's no surprise that the dollar is bouncing here and strengthening as the market prices that in. And it's no surprise that a stronger dollar puts downward pressure on liquidity globally, because if the global reserve currency becomes more valuable, that makes debts globally harder to pay off with other currencies that are weakening against the dollar. But that's enough macro talk. Let's get to what everybody actually wants to talk about, and that's Ethereum, which continues to consolidate sideways here right under the $4,000 resistance. I think this is going to consolidate sideways here and bait in some short positions and just absolutely blast through it once enough short positions pile in and start to lose faith in this rally. I still think Ethereum is going to all-time highs in the very near future based on current price structure. It is so poetic that Ethereum is finally doing well and outperforming, and we're seeing all of these bullish narratives for Ethereum right around its 10-year anniversary. We still see companies like SharpLink buying hundreds of millions of dollars of Ethereum, and if we look at the trend of these treasury holdings, we can see that they almost doubled in under a month during July, going from about 1.4 million Ethereum to 2.8 million in under 30 days. And you see something very similar with the ETF holdings, as investors have been trying to front run these Ethereum treasuries and absolutely pile into the Ethereum ETFs. In July, we saw the ETF inflows absolutely skyrocket, and it's no surprise that price has reacted. And if we take a look at Ethereum supply dynamics over the past 7 days, we know how much Bitcoin investors love to talk about supply shocks, and there's no supply left on exchanges, and OTC desks are running out of Bitcoin. Over the past 7 days, there was 18.6 thousand Ethereum in new issuance, but the ETFs and treasuries bought over 400,000 Ethereum over the past 7 days, having a net supply of minus 400,000 Ethereum in just 1 week. Now, of course, this is all very bullish in the short term, and it's great seeing all of these companies pile in, but this is also going to only increase the downside once prices go down. These are not profitable companies that can survive if the market reverses. For example, this biotech firm whose stock was down 99% now decided they're going to try raising $400 million for their Ethereum strategy. This is not something you see in bear markets. This is not something you see in early bull market phase. This is not something you see in mid bull markets. This is something you see towards the end of a cycle, as dying companies and dying firms are trying to save their stock by taking on these very risky strategies and trying to attach themselves to a very hyped up narrative at this point in time. But a bullish narrative in the short term is still a bullish narrative, and this is something Ethereum has been missing for a long time, so it's so great to see that it finally has it. As for ETF inflows, they have slowed down a little bit as price has consolidated, but at least they're still positive. And if we take a look at what's coming around the corner, I'm sure a lot of these ETF investors are looking forward to being able to receive some staking rewards on top of the upside they expect for their Ethereum holdings. So it's no surprise that Ethereum Bitcoin has been doing pretty well recently. My next target for it is going to be about 30% higher against Bitcoin, where the 100-week moving average is. And then after that would be the 200-week moving average, about 70% higher. But that's a long ways away from here. And then once we actually reach that level, we can reassess. I don't think Ethereum Bitcoin is going to make new highs this cycle, but even a double or roughly a 67% increase against Bitcoin here would still be pretty impressive, and anything beyond that would just be icing on the cake. And assets like Ethereum are still benefiting greatly from very trendy narratives right now, like stablecoins. You can see the huge spike we've seen in Google searches for the term stablecoins recently. And we know that a lot of stablecoin usage is happening on USDC, which is mostly on Ethereum and Solana. You can see that even though Tether has almost 4 times the market cap and circulating supply of USDC in blue, USDC still does around double the volume that Tether does. And now that we have regulatory clarity, you can see that USDC's market share of that volume is increasing very rapidly. And it wouldn't surprise me if USDC flips Tether in the very near future with that US regulatory clarity and regulatory backing of USDC compared to Tether, which has been more of an offshore entity over the past few years because we didn't have regulatory clarity for stablecoins in the US. Our tokenization narrative is still in full swing, with eToro saying they're going to tokenize the 100 most popular US stocks on what chain? You guessed it, Ethereum. So could Ethereum hit 5K this year? I think that's very possible, and I think that's what the chart is pointing towards. But the danger of these rallies is people can't be happy with just 5,000 or 7,000 or 8,000, and everybody is going to end up FOMOing in at significantly higher Ethereum prices, because when we go higher, everybody is going to move the goalposts to 16K Ethereum, 20K Ethereum, 30,000 per Ethereum. So even though it's great to see all these bullish narratives, and it's great to see Ethereum finally doing well after we held it over the past year or two when everybody was hating on it and when it was underperforming, we still have to remain calm and try not to end up moving our price targets and getting more and more FOMO as price rallies higher and we start to feel too overconfident in how high it's going to go. Now that brings us to Solana. Chart doesn't look as good as Ethereum, but it's still putting in higher highs and higher lows, which is exactly what you want to see. 160 is my line in the sand that I really don't want to see us lose, because that would be a major warning sign, especially with how much investors are buying based on the stablecoin narrative, which Solana benefits from, the tokenization narrative that Solana benefits from, and Solana has a lot of spot ETFs around the corner. So a market structure breakdown here would be a very bad sign, but I do think it'll hold above that level and break higher once Ethereum cools off a little bit and some of that excitement goes a little bit further out on the risk curve and tries to allocate to the next Ethereum. As for Solana, Bitcoin does not look amazing with that wick to the upside, but it is holding higher low structure as well. So as long as it maintains that, I don't see any major red flags quite yet. But I am seeing some red flags elsewhere, with a Canadian vape company deciding they're going to pivot to being a BNB treasury firm, and their stock jumped 550%. Again, this is not stuff you see in bear markets or early cycle. This is late cycle activity. Now, the good news is the biggest moves happen at the end of the cycle, but it's also the hardest time period to remain calm and rational when everybody is celebrating how much everything is going up. Similar thing here with a NASDAQ listed Mill City Ventures earmarks 441 million towards a SUI treasury. And this altcoin treasury trend might increase significantly between now and the cycle top. And maybe that's the alt season catalyst that the market requires. But it's just a good reminder that things are getting a bit overheated here with these treasuries. But of course, things can always get a lot crazier before they get worse. So we'll see what happens. Solana and Ethereum are back in the green on a yearly rolling basis, and Ethereum is very close to finally getting back above the S&P 500 and NASDAQ. And it's so sad that I even have to say that we had to buy an asset that was so much riskier than Bitcoin and the S&P 500 just to significantly underperform Bitcoin and barely outperform the S&P. But maybe this can turn around between now and the end of 2025. As we've already seen, Ethereum can move very aggressively and very quickly once it starts moving, and we'll continue to see how it does against our benchmarks over the next few months. But as we look forward, the federal government is still running huge deficits. That trend only seems to be worsening, especially with the recent passing of the Big Beautiful Bill. Exponential debt growth means exponential money supply growth, and that devalues the fiat currency we price risk assets in and puts upward pressure on the most popular risk assets that investors want to hold, like the S&P 500, and fixed supply risk assets like Bitcoin. But as always, let me know what you expect. Thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.